Welcome. Is Bitcoin going to crash again? Did SEC just reject world's first Bitcoin ETF? Meet world's first decentralized social media. SEC just rejected Grayscale's spot Bitcoin ETF application. The spot Bitcoin ETF, which would have offered a low cost and easily accessible way for individuals and institutions to invest in Bitcoin. This would have meant a huge inflow of funds into the Bitcoin community. There was optimism in the market following the approval of several Bitcoin futures-based ETF. However, this spot-based ETF by Grayscale got rejected. The main concerns of SEC were reportedly the market manipulation, the role of Tether in the broader Bitcoin ecosystem, and the lack of a surveillance agreement between the market and the regulatory exchange in the crypto markets. Grayscale has argued that it is inconsistent to approve a future-based product but not allow the underlying investment on a spot basis. The denial comes as a blow not only to Grayscale but for the broader crypto industry as well, as this would have signaled a change in perception for cryptocurrencies as well as a huge inflow of funds. SEC Chairman Gensler has been consistent in his demand for an increased regulatory oversight of cryptocurrencies and crypto markets. Grayscale is reportedly ready to sue SEC over the current rejection of its application. The main argument on the part of Grayscale is that if future-based ETFs are approved by SEC, then spot-based ETFs should also be approved. However, the stance of SEC is that future-based ETFs are based on price of CME's Bitcoin futures product, and these CME's futures are regulated by Commodities Future Trading Commission, which was further approved by SEC. As the news of this rejection broke out, there was widespread decline in prices of cryptocurrencies. Bitcoin broke its support at 19,780 and now heading towards its final support at 17,642. Just as we discussed yesterday, breaking the resistance of 19,000 means further downfall for the said cryptocurrency. The expected levels are at 15,000 to 10,000 levels. Now let's talk about Frequency, the new decentralized social media platform. The Polkadot ecosystem will soon have a parachain dedicated to Frequency, the decentralized social media platform. The decentralized social network aims to democratize social media by developing a publicly accessible database of people's social connections and challenging the power of social media giants. But balancing blockchain model with a scale needed for social media is a challenge in itself. Remember that on blockchain, storage has a cost attached to it, and the scale with which a social media network needs to operate, it needs a lot of storage for that matter. And this current model of blockchain makes it unscalable for social media platforms to operate. The Polkadot model of relay chain and connected parachains offer an elegant solution to the problem. It comes with a fixed price consensus. The parachains do not pay a separate fee for each block added. All the fees gets accounted in the cost of the parachain lease. These leases are settled via funds gathered from the community and slot auctions. For applications like social networking, it is a cost sensitive matter, and Polkadot gives you the capability to manage these costs. Rather than charging transaction fees to send messages, Frequency uses a token staking model that earns capacity. Messages can be batched in channels similar to a layer 2 companion system and anchored to the main chain, instead of creating new blocks on the main chain, which cost more money. The current model, which also allow users to vote with their pocketbooks on different features and different applications that are more effective and better for the society. It will also allow for a level of transparency that will avoid the toxic outcomes of the data war. Michael Slayer's MicroStrategy purchased another $10 million of Bitcoin over the past 2 months. The effective rate at which they purchase Bitcoin comes around $20,000. Polygon has just announced its custom blockchain scaling system, Avail. The scaling solution will allow developers to launch application-specific blockchains on the Polygon network. The new product will allow developers to access blockchain data off-chain without need to continually check data from the network. This will help the developers with the ability to update, fork, and change their blockchains. It will be critical for DeFi players and game developers to patch bugs and just reduce their dependency on external chains. The product will also address the data availability problems faced by scaling application. For example, when a new block is produced, how do you check that all of the data of the block has been actually published to the network? There is no way to check that unless the entire block has been updated. With the current Avail system that Polygon is going to introduce, this availability of data can be determined by downloading a very small random sample of the total data. Chainlink's smart contract products go live on Phantom. The two protocols, Keepers and VRF, will allow developers to develop more sophisticated applications on the Phantom network. Keepers is a decentralized transaction automation services that will allow developers to automate their smart contract functions using custom triggers. VRF, on the other hand, uses on-chain randomness to generate fair in-game outcomes in blockchain gaming. This will help DeFi players and gaming developers in a large way. In a recent dialogue with FCA, which is UK's regulatory body, crypto advocates has appealed to the regulator that crypto industry should not be regulated. Not only it is difficult to do so, it goes against the philosophy behind its creation. Regulators were closely watching DeFi lending platforms like Celsius Network after it was brought down in the recent crypto market meltdown. Other ideas were raised at the crypto sprint, included using public ledgers of cryptocurrency networks to regulate crypto markets and setting up international definitions for crypto assets. In India, regulators iterated a similar tone when RBI Governor went on to say that cryptocurrencies are a real danger to economy. He based his opinion on the reasoning that anything that derives value based on a make-believe without any underlying is just a speculation under a sophisticated name. Indeed, there were many cryptocurrencies that were just a marketing gimmick. However, RBI viewed positively at the technology that stands behind it. The Advertising Standards Council of India said that 92% of crypto ad violations in India come from influencers. These ad guidelines are to stop attempts to mislead the youth through over-promising and non-transparent advertising. However, most of the ads by influencers that are in violation of the ACI code do not carry the required disclaimer, the paid partnership tag. The blockchain analytic firm Elliptic has hinted the North Korean hacker group behind the recent hacking of Harmony wallet worth $100 million. Lazarus Group, a state-sponsored North Korean hacking organization which is supported by the Kim regime, is behind the Harmony Bridge hack. The analytic firm has noted that the Harmony Bridge hack is consistent with other hacks attributed to the Lazarus Group, including the $635 million Ronin Bridge hack in March, which was possibly the largest hack in the history of decentralized finance. FATF tells countries to hurry up with their crypto ID checks. This is important in order to curb illegal transfer of monies and black money and money laundering activities that are currently active in the crypto markets. Famously known as the travel rule, it will allow authorities to track these illicit funds. The regulators are also getting increasingly concerned about the NFT and DeFi market, which are being used for illegal money laundering activities. In other news, crypto miners face margin calls defaults as debts come due in the bear market. The prices of cryptocurrencies are falling and it brings bad day for crypto miners. We have seen it from past couple of weeks. JP Morgan says that crypto market deleveraging cycle won't be lengthy, implying that we may have reached a bottom. OpenSea has reported an email data breach by one of its employees at an outside contractor. Consequent to this email data breach, customers are complaining of an uptick in spam emails, calls and text messages. So that's it for today's guys. Thanks for watching. Do subscribe and like the video and share it